Well, hello and welcome to Countdown right here on BloombergQuint Live. I'm Neeraj Shah, with me is Navneet Saluja, and the markets have given up almost all of the gains, and trading back into the red. So the banks too have given way. Remember, we started off in the red, then there was a bit of a bounce, at least for the banks, there was a bit of a bounce, and it took the Nifty and the Sensex above. The Sensex above key levels, the Nifty took the Nifty above the 9,000 levels. From there, I think we've come off quite rapidly. So about 8734 for the Nifty currently, Sensex about 0.77%, and the Nifty Bank 1.28%. Let me quickly enumerate what's moving in the large cap and the mid cap, and then I need to bring you up to speed with what's happening in the more liquid universe, which is the F&O space. So on the gainer side, yes, it's a pharma day once again. So you have the likes of Cipla, Sun Pharma doing reasonably okay for themselves. Dr. Reddy's has participated to about 2.5%. There's strength in HCL Technologies, up about 3% in trade, and Tech Mahindra is giving it company. But there are stocks like TCS which are not doing well. So down about 2.5 to 3% or 3.5% in fact for a TCS. Bharti Airtel has corrected a bit, about 2.5%. ICICI, IndusInd, Kotak, SBI. That's essentially that banking quartet which has brought the bank Nifty down to sub 1.5% in the session today. So the gains quickly getting sold into. We'll mark the global markets in a bit too, but first, just very quickly, I want to mark what's happening at the broader end of the spectrum as well. There was a lot of talk about whether insurance will gain in the session today. ICICI Prudential is showing that it will not necessarily be the case, down about 5.5%. So amongst the key losers in the session, in the large cap, in the larger, broader end of the spectrum companies, Ambuja Cements has corrected about 4.5%. Info Edge continues to grind lower, another 5% lower in trade. So those are a few losers that stood out for me. Amongst the gainers, again, as we said, it's pharma all the way. Alchem Labs 13.5%, Cadila about 12.5%. There is strength in Marksans Pharma about 10% as well. So these individual names seem to be doing rather well for themselves. But Navneet, what about the more liquid universe? Is that too tilting towards pharma? Because I heard you mention in the morning as well that there was some long build-up that was done in select pharma names, and they continue to move higher.
Absolutely, Neeraj. Good afternoon. And there are some pharma companies, Neeraj, which are trading at 52-week high. I'll take you through some of those stock futures. But to begin with, Nifty Futures, remember yesterday they closed with a premium of as much as 85 points. And look at that now. The Nifty Futures are now trading with a discount of about 10 to 15 points. There is some build-up which has come in. I think open interest has gone up by almost 10 to 11%. So it's been a very, very choppy session of trade. Day high was 91.31 on Nifty, and the low was about closer to 86.50. We've gyrated almost 350 points. I think if there is any recovery from these levels, we should watch out for the 20 DM if we can manage to close above that. 89.10 is the level that we would be monitoring here. For Nifty Bank, what a rally we saw. And looking at the rally and the way the index came off, it clearly looks like that initial bout was a bout of short covering that rally that we saw, because Nifty Bank also crossed about 20,000 level in today's session. Right now, it is at about 18,900. And if you would have looked at the volatility when the markets were going up, it did not correct today. So the India VIX remained either flat or marginally in the positive territory. Right now as well, it's trading around the level of 52 to 53. Today's Wednesday, so remember it's the penultimate day to the weekly options expiry tomorrow. Watch out for some key levels. Of course, now the near-term resistance will be today's high on Nifty of about 91.31. But in terms of maximum open interest on the call side, it is at the 9,000 strike. And today we've seen addition of nearly 6.5 lakh shares coming up there. So that remains a key resistance, first 9,000 and then today's high. On the put side, you've still got strikes like 8,700, 8,800, which has seen open interest addition of about 3 to 3.5 lakh shares. So my sense is 8,500 will be a support for tomorrow's session, and 9,000 to 9,100 should be a level that you should watch out on the upside. And now coming to the stock futures, yes, I've got two pharma companies in my list. Neeraj, Cadila Healthcare has touched 52-week high, and we know the reason why. The stock's doing well. They've ramped up their HCQ capacity as well, and open interest today surged significantly, almost 40 to 45%, telling you even at these 52-week high levels, traders are betting on the long side for this one. And surprising bit is Cummins, which was down yesterday. It touched 52-week low once again today, and the way it's recovered, the stock's up about 14 to 15% today. And there are some signs maybe at those 52-week low levels, we've seen some fresh addition coming in on the long side. And Torrent Pharma, by the way, is the other pharma company which has touched 52-week high. Open interest there has also risen by about 25%. 5%. Fresh long positions seen there as well, Neeraj. But I think overall it's the pack. I guess even Divi's Laboratory is doing quite well. That's registered its fresh 52-week high in today's trade.
Now, it seems to be a pharma market currently. It's just almost everything connected to pharma is doing well, and people can't seem to get enough of it. Let's ask our technical experts about how they are approaching trade today, and are they betting again on pharma names, or are they looking to do something different? Manav Chopra as well as Johnson right now. In a bit, I think we'll get to Ruchit as well. But Manav, let's start off with you. How are you approaching trade this afternoon? Because we've given up all the intraday gains. Would you initiate a shot?
No. I think, Neeraj, this is a market where, it is trying to form an intermediate bottom. If we look at the confirmation that the markets have witnessed yesterday, basically we have formed a higher bottom in the market. So earlier low for the Nifty was registered around the levels of 7,700, and the lows that were formed on Friday were close to 8,050. So, we formed a higher bottom for the Nifty, and it has also even exceeded its intermediate peak. So we are getting into a formation of high tops and bottoms. Yes, there has been a good amount of profit booking done from today's highs, but since the markets are bouncing from its deep oversold levels, there would be odd selling pressure we'd be witnessing at the high levels. But as long as the Nifty sustains the support of 8,400 to 8,500, I sense the markets would be moving towards the levels of 9,300 to 9,400 in a very short-term perspective. Bank Nifty too has formed a very strong support zone. And, the support of 18,500 would be a very crucial support for Bank Nifty. So as long as these levels hold on for Bank Nifty, I think the Bank Nifty would be, again, we could see a rally towards 20,300 to 21,000 in Bank Nifty.
Ruchit, what's your sense? How are you approaching trade today?
Hi, very good afternoon, Neeraj. Neeraj, if you see last two trading sessions, in fact yesterday and today, the move is more of a short covering move rather than fresh long formation. Primarily, if I look at some of the data points, then yesterday, in spite of Nifty being up by 700 points, if you look at the open interest data, the open interest in Nifty has increased nearly by 0.30%, whereas in the Bank Nifty, the open interest increase was about 2.5%. So this clearly indicates that this was a short covering move which we had seen yesterday. Even when I went through the stock-specific data or the stocks sector-specific data in the derivative segment, then all the long formations which were there, the long formations were purely in the pharma stocks only. Now, most of the pharma stocks with, Dr. Reddy, Lupin, Sun Pharma, Divi's there, they all have witnessed increase in price along with significant rise in open interest. But apart from the pharma names, if you look at the other sectors, may it be stocks from the banking sector or the capital goods or any other names, even some of the metal names like credit, there was more of an open interest unwinding and a minor open interest increase which could have been seen. So I think this is more of a short covering rally. Usually the short covering rallies in a bear market are very fast, and in case if we retrace about 38.2% of the recent down move, then it gives a target projection somewhere around 9,430. So I think we could test this 9,400, 9,430 range in near term. Now yes, today we have seen good amount of profit booking from the higher levels, primarily the 9,000 call writers which were there. They have not unwinded their position. So maybe tomorrow we are headed to the weekly expiry, so we would stay below 9,000 maybe till tomorrow. And once we cross this above, once we give a closing above 9,000 mark, then I think that 38.2% retracement above 8,400, 8,430 could be tested.
Okay, so in light of that, what should be the stocks that one should monitor? Manav, can I come to you first? Your ideas for the afternoon.
Sure, Neeraj, like you mentioned, pharma is one sector which is looking very well placed. My topic from this sector would be Divi's Laboratories. Yes, we have seen a very good consolidation breakout into this stock a couple of days back, and most positive thing is there has been a continuous follow-on move. So that is one a very good important factor, which is an important play which is required when it's required for trading. Also, the momentum oscillators placed in the pharma index and also the Divi's Laboratories definitely indicates a positive crossover. So it's a buy with a stop loss of 2,100 for an upside target of 2,400. The other pick I would like to recommend from the auto packs would be Tata Motors. In fact, this is likely to be a good contract trading play. I would specify for a short-term perspective. The prices are in deep oversold levels and series of positive diversions. Also, along with volume breakout today, I sense that this stock is likely to see a very sharp recovery rally from its deep oversold levels. So a stop loss of 64 on the lower side and expecting a short-term upside target of 80.
What about you? Your ideas?
We are not going very aggressive on taking long trades or even short trades over here. But no, yes, the pharma has been one of the space which has been showing outperformance. So one of the mid-cap pharma named Granules is where we are advising to create fresh longs on. With the stock below 154, the last couple of days we have seen good volumes building up along with the price of move. So we expect the stock to test its near-term targets of around 188. So current levels we can go along with Granules with stock below 154 for target of 188.
Let's get in our fundamental guest on the show. Sunil Shah, Turtle Star Advisors, joins us right now. Sunil, good having you. Thanks much for joining in. What is it that you are doing in pharma, Sunil, that seems to be the pocket that has caught everybody's imagination? Is there still value here despite the run-up that we've seen? And if so, where do you see value in pharma and why?
Okay, I think market is preparing for a big shift which is going to happen globally in terms of the outsourcing which is happening. So pharma is clearly placed in that category. You have companies, but we as a unit are extremely watchful. We believe that even the US FDA norms are going to be tightened, which is going to be the case from 1st April onwards in a normal scenario. And right now, the news which is going around in terms of some of the medicines which are required in the US market, and that is perhaps one of the reasons why pharma stocks are being fancied in the market. But from our side, we are not looking at that as a space to invest in. We would be perhaps looking at something else where we think there is a lot more comfort and we see some structural changes also happening which will benefit the companies in the long term. So we are keeping away from pharma as a pocket to investment. As it is, we are worried on the US FDA, and if there are any issues which crop up in those companies, the earnings take a very severe beating. So we are avoiding that to invest for our investors, and that's our thought on the pharma space.
Hi, good afternoon. Which are those spaces then you're looking at right now? We've seen sharp correction in asset prices right now, and pharma is not the space, which was also not doing well, by the way, in last 3 to 4 years. We've seen a strong rebound. Is there any specific sector or any specific theme that you're looking at closely where you are finding valuation comfort too?
Sure. So I think we would try to look at companies which have safety in their business model. In fact, there is a complete lockdown in the entire country right now, and most of the companies are really shut, barring the stock market as an activity. So I think ICICI Securities is one such company which we like. The return on equity ratios are very much comparable to something like an HUL as well. A company is cash rich. Company was available at a 40% discount to the price at which it was trading at just 2 months ago. So this is one such company which is insulated from the volatility, will participate in the upswing in the market. It is a very, very fintech-driven model, highly scalable, negligible risk on the business. So ICICI Securities fits our criteria of investing in such an environment where business is insulated, cash rich, debt-free, absolutely meeting our criteria, plus you are getting it at a 40% discount in terms of price where it was just 2 months back. So that can be one such company to look at. As in the finance pack also, we think when the actual lockdown opens up and there will be risks which will be there in terms of the receivables, etc. for the business, there will be a lot of shifts which will happen even in the finance pocket of investing. So we think this is one such company which is insulated from all of it, and that's one which we like. Other one which we think will benefit can also be something like a GMM Fowler. So that is one company which is an indirect beneficiary of pharma and chemicals both, because they make those machines which are required for both the pocket of pharma and chemicals. They have huge order book. The stock had run up significantly. It had almost doubled in like 2 months' time. The stock has corrected and maybe offers value. So I think again in the market, the risk remain of the uncertainty of the global virus. Plus, we don't know after lockdown how will the situation come in India. So market could remain volatile. So maybe a stock like GMM should be on perhaps one's radar to look at investing on the declines or on at certain price points, which makes sense for investing. So I think it's time to make those kind of lists and cherry pick those and wait and then invest into those ideas.
Okay, so those are some stock ideas coming in from Sunil. Just want to highlight a few other stocks. Bandhan Bank has been, I guess, one of the weakest banks. Bandhan, IndusInd, even RBL Bank in the last 1 month or so. Of course, we've seen some minor recovery for overall banking space, but these three have been laggards. And particularly in today's session, I guess Bandhan has bounced back quite sharply. It's up about 15% right now. Sunil, before we thank you on the banking space, and especially these three stocks which have tumbled a lot and they've been underperforming, Bandhan, RBL, IndusInd, do you see any opportunity? Or do you see opportunity in good quality banking stocks which have corrected, maybe HDFC Bank?
Yeah, so our thought would be to look at companies like obviously HDFC Bank. Even in this turmoil when, we are going through a phase of 3 months of moratorium, HDFC Bank has come out and stated that if a person who is exercising this option of 3 months of moratorium on, let's say, a 3-year loan, he will end up paying one more EMI on his product. So this is one such company which is extremely safe, and even if they have to go through the moratorium route, they are ensuring that the profitability of the business is not getting affected. That is, instead of 36 EMIs, you end up paying 40 EMIs. So 3 of moratorium plus one more extra, and that is how the company has really have the processes to come out so fast and inform their clients and customers about how this is going to impact them as well. So I think that is one extremely safe bank, which is again corrected from the peak. So price levels, they have become very decently moderate. Plus, when the economy opens up, they are placed to capitalize on the growth as well. So there is no question on the asset liabilities for this kind of company. So I think we would look at the top rung bank, which is available at a value right now. Something clearly is HDFC Bank, but Bandhan, which has got huge microfinance, which was always a risky business to be in. IndusInd and RBL, yes, market is having its own questions on their loan book, which is there. So we want to keep away. We don't want to get into extreme value-based investing or taking the risk, because even quality is available at a value right now. So we would like to be safe on that side.
I think that makes sense too. Okay, Sunil, we'll leave it at that. Thanks much for taking the time out and being with us and giving us your thoughts. Well, Apurva Prasad of HDFC now joins in right now. Remember that one pocket two pockets that everybody is talking about are pharma and IT. We've discussed pharma at length. Let's talk a bit about information technology as well. Apurva, thanks so much for taking the time out and speaking to us. What's your sense? There are multiple reasons being given to own IT names right now. One, the defensive nature. Two, some of these are world-class facilities which don't get impacted as much by the lockdowns because people can work. And three, there's this possibility of buyback come the cash-rich balance sheets that these stocks have. What's your sense? Are you bullish? And if so, what's the key reason?
Hi, good afternoon. Yeah, so while we are constructive on the sector, but there are very clear risks that have increased and definite uncertainty as part of the second order related impact. So COVID-19, if you just look at the pace at which things have aggravated over the past month, there are areas of concern, especially in verticals such as travel, hospitality, energy, utilities. We all know how the interest rate has trended, so that can have an impact on the BFS segment. But yeah, there are very clear pockets of concern. So while there is not a lot of risk on the execution of current projects, I think so that transition has been done fairly well, which was the first order impact of the entire episode. It is more the second order impact, which is a bigger uncertainty, and I think that's likely to play out in the first quarter. So risks arising out of tech spend and budgets for some of the enterprises who are dealing with their own set of challenges.
Yeah, well, that's a pertinent point too. I think we saw something similar happen to NID Tech, didn't we, last week, wherein the aviation-related issues came up, especially with British Airways. But Apurva, so therefore my question is, are there companies which might have a few of these speed bumps, but because the canvas or the number of clients and the number of verticals that they are present in is large enough, they might be able to glide through it in a better fashion?
Sure. So there are different ways to look at it. So there are some companies that have a slightly higher disproportionately share from some of these affected verticals. So that becomes a first level screener. So you are looking at companies such as a Mindtree, Hexaware, or an even Emphasis in some case, from that perspective. So screening for companies for affected verticals, that is one way. Second is looking for companies which have got relatively higher client concentration and therefore the related risks. And larger companies with slightly more granular portfolios should be revenue. So that is again another way to look at it. But yeah, in the entire event, there is a lot of uncertainty. In fact, if you just look at the recent cut by some technology advisors such as ISG and IDC, that is pointing towards regrowth for the year. So estimates currently are building in a decline in FY21. That's largely to do with a very flat exit rate for the fourth quarter and a sequential dip in the first quarter. So I think the risks are very clearly increased. What are the positives? There are a lot of things that can improve as we are looking at the shape of the recovery. Some acceleration in the digital transformation related projects. So we are very well aware of enterprises that are relatively better insulated if they are already migrated to cloud. So I think activities around cloud migration, cybersecurity, virtual workplaces, I think investments on those areas will accelerate. The second positive can be that investments, in fact, there can be market share gains versus some of the captives that are operating, or some of the lesser efficient captives that are operating. So that is another area of opportunity that we can look at. So I think, and besides that, companies that manage the supply situation better, there are again vendor gains that we are looking at. So I think a lot would depend on the shape of recovery. And as of now, we are building in a deeper impact in the first quarter and a protracted recovery over the September quarter. But the situation continues to remain fluid, and so we are watchful.
Sure. Apurva, hi, good afternoon. Of course, the focus will now shift to the earnings as well. Before I get to your earnings expectation for the March quarter, do you feel the deeper impact of COVID-19 will be felt in the June quarter rather than the March quarter?
Yes, that's correct. Actually, we do expect a deeper impact in the June quarter. If you see the March quarter, the impact would really be towards the last 3 weeks. That's the time when projects would be transitioning. So there were some supplier-related challenges and project ramp. That's essentially 2 months out of those 3 months. Even the deal ramp-ups as well as the new deal announcements have been pretty strong. What has got impacted post that is the pipeline conversion as well as creation of new pipeline. So pre-sales activity will understandably be much lower. So it's fair to assume that the first quarter impact will be a lot more significant than the fourth quarter. So we are currently expecting a flattish fourth quarter performance of the sector. So at the sector aggregate, we expect 0.3% Q-on-Q and about a 5.5% YY growth. Now this moving into first quarter, we are building in something closer to a mid-single digit Q-on-Q decline. So that's really how things are trending over the next 2 quarters.
Very quickly then, Apurva, which are the stocks where you have a buy rating even at these levels, and what sort of a potential do you see for stocks where you're bullish on?
Sure. So we haven't changed our pecking order. We are still more bullish on Infosys and HCL Tech from the Tier 1 IT. We also have a buy rating on Tech Mahindra. So that's really our pecking order in the large caps. On the mid-sized, it is L&T Infotech that we continue to like, and there is enough potential in some of those names too.
Okay, Apurva, we leave it on that note. Appreciate you joining us today and taking us through your views in the IT space. So you mentioned that the deeper impact of COVID-19 for IT companies will be felt in the first quarter of FY21, and they're expecting revenue growth for the March quarter to be between -3% to +3% on a sequential basis. And we're still in the red, but of course we've recovered from the lower levels. But let's pull up Reliance Industries and talk about that. We've got Soumit Sarkar, who joins us to take us through what Morgan Stanley has highlighted in its report for Reliance Industries. Hi, Soumit. Good afternoon. Take us through that report.
Good afternoon, Navneet. So Morgan Stanley has maintained their overweight rating on Reliance Industries, but they have cut the target price to 1,544 from 1,632. Now, Morgan Stanley has pointed out few potential headwinds for the stock price in this note. Now, the first headwind that they have pointed out is the balance sheet because of high debt on its book, and then there is concerns around the energy businesses due to low demand and weak margins, both in the refining and the petrochemical business of the company. Also, a slowdown in retail is expected due to COVID-19 induced shutdown. However, the brokerage feels that the share price is discounting more than just these negatives. It believes that the net debt of the company could fall even if the energy and the retail demand struggles for the next 6 months and the asset sale plans of the company are delayed going forward. And the company would do so by reprioritizing its investment and by slowing down its capital expenditure by up to a third, says Morgan Stanley. Along with this, refining and petrochemical businesses are cyclical and could well reverse post the COVID-19. Also, the telecom business is expected to report strong numbers in the fourth quarter compared to the other business verticals of Reliance Industries, and that's the reason it has maintained its overweight rating on the company. Lastly, it believes that beyond COVID-19, Reliance Industries will emerge as stronger as competitors would face high debt challenges and slow investments post COVID-19 situation settles down.
Okay. Samit, thanks so much for putting that into perspective. So that's the view on Reliance Industries, though I don't think any view is helping today. Must say the stocks have been very choppy and volatile, but this brokerage is a lot more bullish on Reliance than maybe some of the others. What about the charts, though, on Reliance Industries? Manav, you want to come in on Reliance on the charts? How does it look?
Sure. In fact, Neeraj, we have seen a very good move in Reliance Industries, at least recently from its lows of 940, and I sense this is one stock which has managed to hold on to its important short-term averages compared to other large cap stocks. So if I put aside the pharma space, I think Reliance individually has seen a very good amount of movement from the energy space, and in fact it has very strong support at the levels of 1150 to 1140 on the lower side. I would still recommend a bounded approach even for a short-term trading opportunity, and I sense targets of close to 1300 on the upside, which is likely to be achieved in the next couple of weeks. So Reliance would be a very strong contributor for the Nifty to come towards the levels of 9200 to 9500, which is our potential target. So it's definitely a buy on this.
Okay. So Reliance Industries is one name that you need to monitor. Now we'll get in Sharad Dubey in a moment from now to talk about the Fab 4 stocks, and then of course a bunch of viewer queries have come in and we'll try and talk about some of those. There are some queries on Cummins India, there is a query on some specialty chemical companies. Yogesh Mehta will also be with us to probably talk about that. And remember, on the FNO side too, we discussed Cummins and how an interesting move it's had compared to what it was doing yesterday and what it is doing today. So we'll talk about that stock as well in just a moment from now. But Ruchit, since we spoke about IT just a minute ago, I'm wondering how do you look at the charts of an HCL Technologies versus the charts of a TCS? They are showing opposing moves today.
If I first come on to the Nifty IT index itself, then last few trading sessions we have seen that along with the markets, this stock too, it is index installation. Yes, high coincides that 20-day exponential moving average in this index not yet crossed 27th of Feb. So once we see a breakout about the 20 days exponential moving average in Nifty, I think many of the large cap stocks from this space to participate, or we could see some positive momentum. Otherwise, still the index is trading below the 12,900 mark. Yeah, till the index is trading below.
Richard, I'm losing your feed a bit, so I think we'll just have to try and reconnect that and then try and get it on a more cleaner feed in order to get your opinion. So just hang on for a bit, Richard. Maybe it's a good time to get in the Fab 4 stocks of the day, because while the markets are doing what they are doing, individual stocks would be in focus. Sharad Dubey, what has made it to your Fab 4 list of the day?
Well, hi, good afternoon, Neeraj. The first stock making to my list is TVS Motor. The stock is up more than 5%. So basically, Bloomberg News has reported that it is the companies among the prospective bidders, considering to make an offer for the classic UK motorcycle company Norton, which has actually gone into administration in the month of January. The company has approached Norton's administration about a potential deal. The stock itself has run up almost more than 10% in the last two sessions. Up next is from the pharma pack, Cadila Healthcare. The stock is up more than 15% as fresh longs is seen with a high open interest of almost 44% and the volumes trading at almost 8 times its 20-day average. The company around 10-15 minutes ago came out with a press release stating that at present it is testing the vaccine for coronavirus is being actually carried out. These tests are being carried out on animals itself, and after successful clinical trial, it will be actually done on the humans as well. And next is Ashok Leyland. The stock is up more than 8.5%. It's the top gainer in the Nifty Auto Index, and the stock is trading at almost highest level in almost 2 weeks, and the stock has risen almost 15% in the last 2 sessions. And the last stock of the day is Cummins India. The stock is up more than 14%, seeing its biggest intraday gain since September 2007. The stock has 6-day losing streak, and also it has seen a 20% in swing during the day's trade. Back to you.
That's the thing. It is about some of these stocks. Sharad, thanks so much for putting that into perspective. We'll talk about Cummins India. Let's start taking those queries. We'll get in Yogesh Mehta as well to talk about this stock fundamentally. But let's start off with the technical views on some of the stocks. First, there is a view from Anand Kumar for a view on Titan from a trading perspective. Manav Chopra, can I come to you? What do the charts of Titan indicate? The stock is down in the session today.
Sure. In fact, Neeraj, Titan faces stiff resistance at the levels of 950 to 960 on the upside, which coincides with some important Fibonacci clusters. And I expect the stock to be in a broader range of 870 on the low side to 960 on the upside. So a broader step, 80 to 90 points is the range that the stock is likely to move in the near term. Any positive momentum in the stock would eventually come once if it breaks above the resistance of 970. Looking at the chart formation, I sense the prices would get into a short-term time correction. The undertone will remain bullish as long as we are seeing a move, seeing the stock holding 870 levels. So any positional traders can maintain a stop loss of 870 on the lower side, and on a decisive close above 960, 970 can expect an upside target of close to 1020.
I want to take the next query, and then I'm sure Navneet would have a couple of those queries as well. There is a couple of other queries too, but there is a query from 2 or 3 people on Cummins, and therefore I'm tempted to speak about that first, fundamentally and technically both. Manav, I'll come to you first technically. If somebody is trading Cummins and is short on Cummins today, what's the recommendation?
My recommendation would be to definitely cover your short positions. For simple reason that the prices have seen a series of decline from its levels of 580 and has now started to rebound after a good 50% decline. So looking at this formation, it seems like a good short covering rally, which is likely to be seen in a short-term perspective. On the upside, this rally could see further upleg towards 355 to 365 levels. So I wouldn't recommend anybody to hold on to their short positions, but today would be a good day to cover your shorts and big profits.
So for a lot of viewers who've spoken about Cummins, and Akash Ramdev asked about what's driving the move in Cummins, we'll ask Yogesh about it. But if you were short on Cummins, Manav is recommending covering your short positions. Frankly, that's what a couple of other people who I spoke to also on WhatsApp seem to suggest that. And when we just look at the brokerage notes that had come out earlier on Cummins India before COVID-19 hit us, for example, Nomura already downgraded the stock to a reduced rating on a weak outlook. Yogesh Mehta is with us. Yogesh, by any chance, do you track Cummins India fundamentally?
But Neeraj, haven't seen for a long time Cummins India. But I would say that almost when the last result came of the Q3 numbers, that time also there was a little bit of disappointment, and though the guidance was reduced by the management, and from then the stock price is just beating down lower and lower. But I don't foresee that there is any scenario in COVID-19 scenario that there would be anything positive for any companies like Larsen & Toubro or Cummins India per se. So I would say better to avoid and get into the quality stocks rather than into Cummins India.
Okay, avoid Cummins India if you're holding it, and also the technical call was you should cut your short position. Very interestingly, yesterday when markets were up, the stock was down and open interest went up by about 75%, maybe that was the trigger for people to go ahead and take more of short positions. But it clearly didn't work out today. The stock touched 52-week low mark, and then from thereabouts, it's recovered. All right, let's move on and take some more queries then. Sai Srinivas writes to us, and he has a query on IndusInd Bank. Hi, Yogesh. I'm going to come to you for IndusInd Bank. We've already gone through the highlights in the conference call which the management has given. They've lost deposits of about 10 to 12%. It's corrected quite sharply in the last 1 month. And not to forget, last 5 years, I think this was the darling of the street. The magnitude of correction that it has seen and the lower provision coverage ratio for a while has been a concern for this bank. What's your outlook fundamentally? Would you be a buyer at these levels?
Hi, Navneet. I would say that for particularly this IndusInd Bank, there is a lot of ruckus has been on in last 2-3 months post results, especially, and one should avoid this company as an investment at this point in time. Though the valuation and the price both have corrected significantly, that downside seems to be limited. But there are lot many hidden things which are not being out from the management about the coverage ratio, which has been on a high, which has been now lowered because of the few write-offs, and still there could be some on the hint side. So better to avoid such kind of things. The only positive trigger which has come overnight, which one of the FI company has invested into this stock. But barring that, there is nothing much positive. Downside, further downtick into the company, and if at all anybody is brave-hearted and want to take a risk, then can accumulate from current level with the risk. Probably they might have to see 250 or 270 again.
Okay, that's the view coming in on IndusInd Bank. I also want to pull up Titan. We've got a query, of course, coming in on YouTube from Anand Kumar, who wants, I think, a technical view here. Manav, Titan is corrected. It's one of the top losers even on Nifty today. What are the charts indicating? Is there any position that one should take? Or if you're already in it, what levels would you, suggest to monitor?
Yes, I had in fact just mentioned it. The levels for Titan on the upside resistance would be at 960 to 970, and there will be a positive momentum in the stock only on a decisive close above it. The undertone for the stock remains bullish. One can continue to remain long position in this with a stop loss of 870 on the lower side.
Okay, guys, due to paucity of time, I'm just going to, squeeze in my last query. And this is somebody wants a fundamental view on Atul Industries. By any chance, Yogesh, do you track this counter?
No, he's not tracking Atul.
Okay. We tried squeezing in some queries, but just shifting focus back to markets, and Nifty is at 87.43. We're seeing a cut of nearly 0.5%. Nifty Bank is also down about 0.5%. So we've come off sharply from the higher levels of the day, and futures are just about, I guess, they're trading at par now with the spot Nifty. But Yogesh, yesterday was a good session, and overall, if somebody wants to see last 2 weeks or 3 weeks performance, we've recovered from 7,500 to now 87.50. Does that build in any sort of confidence? Do you think this is the right time to deploy money? If yes, any stock, any sector that you're watching out for?
No, I would say the time is, so far it is not that the time is right, but the prices have corrected to such level in a few companies where the prices are right. So I would say this is the time to go for the price of the stock, price of the stock is come down. So that needs to be watched out. And COVID-19 scenario is still on which is not sure, and it is still unknown, and we cannot measure that. But for that, I would say that there are a couple of companies in the sector which one can be looked at. Even in the two-wheeler segment, I would say that the rural scenario may improve further if there is any stimulus package being announced. Then these two-wheeler companies can be looked at from current level, like Hero or the Bajaj Auto, namely. And a few companies into, say, a retail segment also can be looked at as a retail, like Trent, which has corrected significantly, and now it is near to somewhere around 450, 460. So once they are into online segment as well, but then also the footfall is a bit concerned, but I would say that is priced in. So there are a few companies which can be looked at, and pharma, I would say I was recommending throughout the time, and now the time has come to book a profit there, because I think the run-up has been so sharp and so fast. So there I would say I would be gradually booking profits.
By the way, compliments to Yogesh for giving a right call on IRCTC2. That was the last day of the lower circuit. From there, the stock has been on a bit of a roll, so really good going for that stock. It was a brave call at that point of time, but nevertheless was given. Just looking at some other stocks which are working up in trade, and just look at the movement. Brigade Enterprises, that stock has really rushed up in the last few minutes of trade, as also Aegis Logistics and SL Propack. There are some 3 or 4 names which have had a remarkable up move in the last few minutes of trade, but Brigade in particular, really smart move that we're seeing in that one. What we are not seeing a smart move is BPCL, which continues to grind lower, down about 3%. Some bit of a downtick coming in the last 10 minutes of trade. Ruchit, Brigade Enterprises, the markets may not be doing as much. Not all the real estate stocks are doing well, but Brigade is. How do the charts look here?
I think as of now it should be just taken as a pullback move, because if you look at the volumes along with the price up move, then the volumes are not that high in this counter today. So I think I would just take it as a pullback move. The 20 days exponential moving average, which is around 150, continues to be a stiff resistance. So 150 to 152 would be the levels to watch out for. In case we see a follow-up move tomorrow and the stock crosses 152, then I think one should look to get into catch the momentum.
Okay, so that's the view on Brigade Enterprises. It's showing a bit of a bounce in the session today, maybe a pullback move. Let's see if it gets sold into or no. The other interesting move today has been in Bajaj Finance. All over the place today, was in the red too, then right now about 3% in the green. So that is not doing all that poorly on a day when the markets themselves are actually trading in a bit of a poor fashion. So do watch out for this one. The 2 cement names have corrected a bit today, which is Ambuja Cements as well as ACC. So both of them down about 5% apiece. Not the best of outings for these 2. So do watch out for these names as well. And ICICI Prudential is the other one which is corrected. Actually, coming on this one, Manav, ICICI Prudential in the morning, there was a belief that maybe some of the insurance companies could do well if the bounce back move continues. Somehow ICICI Prudential has not been able to live up to the billing.
ICICI has already seen a good and I feel it is just trying to consolidate its gains. Usually we see such kind of a formation post a very sharp move from its low, so it's getting into a consolidated formation right now. The support for the stock would be at 330 on the lower side, resistance would be at 365. So post this consolidation, a likely breakout is to happen on the upside. We have already seen a good positive crossover in the oscillators from the oversold level. So maybe in the next couple of trading sessions, we could see this move happen on the upside. For any short-term traders, I would still recommend one can look to initiate long positions at the low levels with a stop loss of 320, and we can still expect an upside target of close to 400.
Okay, that's the technical view coming in on these companies. But I think just 15 minutes to go for markets to shut shop. So let's check what the dealing rooms are suggesting. Remember, this has been a truncated week. Monday was off. Friday is also a holiday on account of Good Friday. Let's head across to Darshan Mehta, who's our research head, to find out what the dealing rooms are suggesting today. Hi, Darshan. Good afternoon.
Hi, and today it was doing well, but suddenly today the market's corrected from the high. So a little bit of skepticism as far as the market is concerned. A couple of stocks that I did manage to get out of from the dealing rooms that were working. PVR for one, is something that's been spoken about. And given the fact that there is a chance that the slowdown, the lockdown probably will extend, some of the cities have already indicated that will there. PVR probably will be impacted and the business will be impacted. So something is of a bit of a concern. Bajaj Finance, after the weak commentary that the management gave in the con call, seems to be grinding lower. It's moving in the range of 2,200 to 2,400. But over what dealers indicate that at high levels they are receiving sell flows from the FIs. And Tata Motors has actually moved in from levels of 200 right now to almost 65 currently. Dealers indicate at this level and at lower levels, some of the HNIs are taking long positions on the counter.
Okay, Darshan, thanks a lot for bringing that dealing room check for us. Bajaj Finance seems to have rebounded today, I guess. It's trading with gains of about 3.5 to 4%. Remains to be seen if these gains are sustained or not. But your top F&O gainer right now is Cholamandalam Investment. It's gained about 17 to 18%. It's trading around the level of 153. Richard, you want to come in here on the charts? The move of 17 to 18%, what do you do here at these levels? Do you create a long position?
Just for a pullback move, one can create a long position. there is a positive divergence on the RSI where the futures have formed a lower low, but the RSI has formed a higher low. So I think we could see some pullback move towards 170, 175 kind of range. So if one has to take a call just for 2 to 3 trading sessions, then one can buy with stop loss level 138 for target of 170.
That's Cholamandalam investment for you, up about 17% in trade. But getting you some more market voices, investors should look for companies with strong fundamentals to invest in amid the coronavirus uncertainty that the word is coming from Pramod Gubbi of Marcellus Investments. And he also believes that insurance companies could be a good long-term bet, while Chakri Lokapriya of TCG Asset Management believes that pharma is the space with attractive valuations in the current scenario. Listen in.
I think the only thing that is given is that this uncertainty will prevail for, I guess, perhaps the next 3 to 6 months, perhaps even longer. In that light, I think the only way one can approach investing or the markets is to look at fundamentals and long-term fundamentals. We reckon that, if you're investing in companies which have seen a significant resilience to these sort of impacts, and that should form the core of your portfolio where, post-crisis, they are likely to emerge out stronger with significant gains in market share. And hence, you can really take a longer-term view and say that these will survive these crises and their valuations are by and large reflecting long-term cash flows as opposed to 1 or 2 quarters earnings. And therefore, given the fall in stock prices, they present a great opportunity to buy these stocks.
What do you make of how people should approach the consumer lending business on the back of the call that we had from Bajaj Finance? And what's your view out there?
If for this to look at the present, it's good to look back at the past where the consumer lending was the darling of lending. All banks also were focusing on retail lending. Corporate lending was always was looked upon as a high NPA business, especially in the most recent business cycle. Now, suddenly, in a corona world and a post-corona world, clearly for the next couple of quarters, consumer spends are likely to moderate. Yes, it will come back eventually. And second, there is a moratorium on repayments of existing loans. Yes, again, that is short term. But this kind of derails next 2 quarters. Now, can it lead to a certain amount of NPAs going up in the shorter term? Probably yes, for select players. So will valuations hold up like they did in the past, as in the kind of a premium multiple that you gave to some companies? I don't think so. The multiples are likely to come down. And second, if you look at in this country, more 40% of the economy is a parallel economy. They're largely self-employed. And they also go out and borrow and buy various things. Now, that sector has been hit, or rather the parallel economy will be hit probably far more than the organized employees. And so, which means at least for the next 2 or 3 quarters, lending is going to come down. But so against this backdrop, I think the multiples will come down. Yes, they are strong businesses, but the demand side of the equation will slow down, as well as GNPs will marginally go up.
Okay, it remains to be seen whether financials will continue to be the darling of the street. Remember, last 10 years, we've seen a good contribution coming in from there, be it Bajaj Finance or the Hdfc twins. And it is the unsecured lending retail part of the business which has spooked concerns even in the market. But Chakri, I want to talk about a pocket which has been doing well. And even in today's session, I think pharma continues to, see increase in prices today as well. So Cadila, Cipla, Biocon, across the board, we are seeing buying coming into the pharma companies. Considering it's a pocket which has not done well in the last 3 or 4 years, do you think it's just the beginning and this rally will last? The pricing pressures we were seeing for these companies may ease going ahead?
Yes, I think pharma as a sector will do well, not just for this year, but also for the next couple of years. in terms of, because there is a certain amount of re-rating that is happening.
Okay, so those are some market voices giving their opinions. Neeraj, a while back, highlighted, I guess, ACC Ambuja. I think even Ramco Cements is corrected. It's trading at day's low. It's down by about 5% right now. And you've got Escorts, which is corrected. That stock's also trading with cuts. And a couple of other stocks which are facing the heat today are the likes of your heavyweight. TCS is down nearly 4% in trade. Yogesh, you want to comment on the IT pack, considering we just spoke to an IT analyst and he was mentioning that he's expecting the revenues this time around to be between -3 to +3%, and the deeper impact of COVID-19 could be felt in the June quarter. What is your overall assessment, also keeping in mind the currency is depreciating, which works as a tailwind for these companies?
Right, Navneet, for IT, I think the currency which has been depreciating right now with the new low, but that will give a tailwind of maybe in Q4 nothing would be there, but in Q1 next quarter, current quarter, maybe it will be advantage of 1.5 to 2% on overall sales, not the the profit margin. It will be hardly 10 bips to 15 bips. Now again, coming back to the point of IT companies now, COVID-19 will have a much more impact because work from home is too difficult task for them, though they are saying that we are managing somehow and the business is on track. But I think slowdown of economy into US and European region will have some kind of it will hurt the business for all these companies, be it large cap or the tier 2 companies. So I would say that this time around revenue would be -2 to -3 percentage point. But if you look at for the next quarter, it would be much severe on the negative side. So one can avoid any of the large cap companies, even though the valuations are around 14, 15, 16 times P multiple, but there is no growth visible at least for next 2 quarters. So I would say better to avoid these names, though these are capital protection name. So downside would be limited, but there is no growth at least.
Okay, downside.
Go ahead, Nani.
Please go ahead, Neeraj. I was just going to go to our techies to take their closing strategies.
Yeah, no, I just wanted to mark one thing before that, Navneet. There seems to be a bit of a chatter around how the lockdown could get extended in Maharashtra. By the way, seemingly from the looks of it, if you are in Mumbai and stepping out for whatever reason you are, wearing a mask seems to have been made a compulsion, and which could invite a penalty if not so. So keep that at the back of your mind if you are in Mumbai, indeed, Mumbai and Greater Mumbai. But I think because of this extension fears, I reckon stocks like PVR are now trading at the day's lows. So you got to keep that at the back of your mind as well. Maybe it is not 15th or 14th April, maybe it gets extended by 2 more weeks, and therefore it could be at the very minimum 29th April. But let's wait for an official confirmation on that, or any confirmation on that. We do not have any confirmation thus as far. But closing strategies, as Navneet said, so maybe good time to take in those first. Manav, your top closing strategy.
Yes, my strategy would be a buy on SRF. In fact, the stock has seen a good breakout today. The prices are trading above its crucial resistance level of 2,900, and most importantly, the volume breakout is confirming a very good bullish bottom, at least for the stock in a near-term perspective. I sense the stock would see a good retracement rally towards the levels of 3,200. So it's a buy with a stop loss of 2,900 on the lower side for a short-term trading opportunity.
What about you?
I'd recommend going long on Cipla. On the hourly charts also we have been witnessing a high bottom structure. So keeping a stop loss below 490, Cipla can be bought from a BTST perspective, since the overall pharma space also has been showing some outperformance for targets around 528 to 530.
Bajaj Finance is in the green, mind you, and FinServ is not. So those are the two slightly contradictory moves that we're seeing. But that's a few very interesting names that I'm spotting. We have 3 minutes left. But Navneet, any other interesting stock that is coming to your attention? I mean, I can see DV Corp falling about 10.5 too. But anything that you picked up?
Sun TV, of course, it opened higher, Neeraj, in the morning, but I think it's picked up momentum once again after being off day's high. So I'll just quickly get a technical check here. Manav, any levels to watch on Sun TV? Do you see any trade here?
In fact, the stock is quite well placed for a short-term good momentum rally, at least for a near-term perspective. Good aggressive short covering move has been witnessed. Also, there has been a good amount of open interest addition into the stock. volumes today are trading above its 20-day average volumes, and the prices are also trading above its 20-day average. So I sense in the near term, the stock could see a short-term momentum rally towards the levels of 360 on the other side. One can continue to maintain long positions with a stop loss of 300 on the lower side.
So those are a few names. There's a lot of queries coming in for why HDFC AMC hasn't fallen too much, or what's the view there. Hey, HDFC AMC, the last I remembered, was at 3,600 or 3,700. Even in the recent past was 3,300. From there to 2,200, 2,300. That's a 33% correction in a non-pending financial stock. Well, that's not just ordinary. That's pretty steep as well. Just wondering the kind of moves that we've seen in some of the real estate names, and while we spoke about Brigade, which has done well, the rest of the pack has just completely gone off. So do watch out for those stocks as well. Yogesh Mehta, if you're still with us, one quick 30-second view. IRCTC, great call there. Would you buy it if you get a chance even now?
Still, Neeraj, I would say that those who are willing to hold on for next 2-3 years and enjoy the fruits of investment, one can still buy at the current level of 1190, 95 somewhere, because my projection remains same, even if there is a lockdown extension up to 30th April or maybe 15th of May. But you don't have any alternative for this business. It's a monopolistic, and the profitability will grow with at least 27-28% CAGR. And with that, I would say that it is still available at 23-24 times P multiple, not much expensive the way Titan or any other companies are listing it growth oriented. So just bet on that and just sit calm on this investment. Okay.
Yogesh, we'll leave it at that. Thanks so much for taking the time out and giving us your perspective. Well, let's start wrapping up the markets. The Nifty and the Sensex, remember it's a truncated week. Tomorrow is the last day. But down about 0.5%. The Bank Nifty 0.75%, not as bad as the intraday low, but certainly way off from the highs of the day. Very quickly then, Vedanta, NTPC, Cipla, Sun Pharma, Bharti Infratel, those are the top 5 names on the gainers list. And then we have a financial name in Bajaj Finance and IndusInd Bank. Who would have thought today? Maruti Suzuki gains a little bit, about 3%. HCL Technologies is higher on a day when TCS is not. And I'll come to TCS too. But ONGC and M&M are the other two which have done well. M&M, well, the last 2 days has put up a strong show. What's not doing well? TCS down about 4%. Shree Cement 4%. Titan about 3.5% as well. And then the banking losers include ICICI Bank, State Bank of India, and I think Kotak and HDFC haven't had the best of days. Down marginally, but down in trade. Navneet, what about the broader end of the spectrum?
Better day for broader market, Neeraj. Also, the market breadth has been positive, so I think that's one encouraging sign. And not to forget the frontline indices, Nifty Bank options, they have an expiry tomorrow. So maybe ahead of that, there was some short covering bounce intraday that you saw in some expiry-related trades as well. We're closing in the positive for the broader market indices, and also VIX remains in the positive today. I think this is after 4 sessions. India VIX was falling in the last 4 trading days, so today it's closing with gains about 1 to 1.5%. Just want to highlight few pockets. Paper stocks in particular, they were up and about. So just marquee names within that pack. You had JK Paper, which went up about 8 to 9%, and a small company like Orient Paper, I think that was locked in upper circuit with gains of 20%. Besides that, you had ACC, Ambuja, Ramco Cement as a pocket. All these players were down today. We saw cuts of about 5 to 6%. And what went up, your top F&O gainers were Bandhan Bank, which rebounded after seeing a sharp fall in last few trading sessions. What also rebounded was M&M Financial. That saw a good surge, I guess, in last hour of trade. And also Cholamandalam Investment saw a good rebound today. And among the Nifty 500 constituents, you had Infibeam, which is down 10%. DB Corp didn't have a great session. That was down about 7%. Also something like Soba Developers, stocks like Edelweiss, they continue to reel under pressure. On the gaining side, Alkem Laboratories up 13 to 13.5%. So pharma as a pack, we've been highlighting. Cadila Healthcare was up about 12 to 12.5%. And looks like NBFCs had a great session. I highlighted M&M and Cholamandalam, but even the Shriram Transport went up by almost 12%. So good going there. Naveen Fluorine also was up about 10 to 10.5%. I want to pull up the participation. Remember, last 2 weeks since the time SEBI circular had come, we had seen a cut in turnover both on the cash as well as the F&O side because of revision in margin margins. But last 2 days particularly, we've seen that participation at least coming back. Yesterday, cash turnover was above 55,000. I think today also we are seeing a figure of almost about there or above that. And even on the F&O side, the turnover is at about 11 to 11.5 lakh crore, Neeraj.
Yeah, well, so participation in trade yesterday was pretty active, remember, but we didn't have a very large buy number from the FI side. So that's one thing that you got to monitor, even if the turnover would be higher today. Irrespective of what's happening to the cash market turnover, it's not that the FI numbers are turning out in great chunks. So that is one key thing that you have to monitor in the session. So 57,000 crores, much higher than yesterday's turnover, 53,000 crores. But let's wait for the institutional numbers too. The Dow futures are not pointing towards a very big tick of green, so let's wait and watch what happens in trade tomorrow as well. But final thoughts from our experts. And Ruchit, in light of the fact that we gave up the gains that we were making today, would you believe that chance of an uptrend now, and considering that we're hitting a long weekend too, would be a lot lesser than what they were maybe 24 hours back?
And Neeraj, if I look at first the move, then this move, as I said at the start of the show, so that this move is purely a short covering rally. We have not witnessed any kind of significant long positions except the pharma space. You look at the stock specific data of yesterday. I don't know about today what would come at 10, but yesterday most of the stocks which had moved up from the banking, financial and auto space as well, they had unwinding in their positions, which indicates that this is a short covering rally. Usually short covering rallies are very sharp, and hence I think this the volatility that we have seen today is likely to continue for next few trading sessions as well. So on the higher side, I won't take it as again a reversal of the short-term pullback that we have been witnessing in last couple of sessions. I think for tomorrow, 8400, 8500 continues to be a very crucial support range. Till this 84, 8500 is intact, one should I think this rally could extend towards the 38.2% retracement line, which is around 9400.
What about you, Manav?
Yes, Neeraj, your point is valid that there has been a sharp profit booking today from the intraday level. So just to make a point, 1500 points, a decline from its intraday peak to where it started from. So it's a big volatility on the intraday basis, but the current structure is definitely indicating that there has been more of short exhaustion pattern, and that's the reason why we are seeing that intraday spurt rallies, which are getting converted into a big sharp momentum rally coming on the upside. But what is missing in the market has been the positive follow through. So had we seen a very good positive closing today, things would have been quite different for going forward for next few trading sessions. Because of today's sharp corrective decline from the peak, I sense market would now get into a short-term consolidation phase whereby we may not see much of a downside, but an odd sharp momentum rally could come on the intraday basis. For Bank Nifty, my short-term bullish biases would continue as long as we trade above 18,200 to 18,300 levels. So as long as we trade above these levels, I think the bulls would be quite comfortable into this zone, and I would again expect a retest of 20,500 levels in the near term.
Okay, Manav, it is important to know your views simply because at the start of the show you did mention that we are trying to form a bit of a bottom and therefore just juxtaposing it with the kind of move that we've seen today. But gentlemen, both of you, thank you so much for taking the time out and speaking to us. And viewers, from Navneet, myself and the entire team that has put this show together, thank you so much for tuning in. Stay safe, stay at home, and have a good evening.
The union to secure your future is here. Andhra Bank and Corporation Bank are now Union Bank of India.
How many places can you be at once?